What's up, guys? Back with some more news. We got Vanguard caves on crypto to retain clients as rivals win flows, opens 9.3 trillion platform to crypto ETFs. With 9.3 trillion under management, Vanguard's entry into crypto ETFs could usher tens of billions in demand despite modest initial allocations. Let's get to the article. On December 2nd, Vanguard will reportedly open its massive brokerage platform to spot Bitcoin, Ethereum, XRP, and Solana exchange traded funds. This strategic volte face ends the manager's steadfast isolation from the 3 trillion digital asset market. For years, Vanguard stood as most of the prominent holdout of the crypto space, driven by a philosophy that viewed the high volatility of digital assets as fundamentally incompatible with the principles of long-term diverse portfolio construction. This reversal, therefore, represents one of the most significant capitalizations in the traditional finance sector, gradual em- embrace of the crypto economy. Crucially, Vanguard said it's not deviating from its core manufacturing philosophy, so it would not be launching its own proprietary crypto fund. Instead, it would serve as a critical gateway, allowing its conservative client base to access regulated products managed by rival issuers such as BlackRock, Inc., Fidelity Investments, and Bitwise Asset Management. Speaker on the broader significance of the move, Hunter Horlesey, Bitwise CEO, noted the stark contrast between the magnitude of the policy shift, the market's muted reaction, a sign of the asset class maturity. As you can see, that's what he noted. If you want to read that for yourself, you can take a minute. Oh, my bad. But I'm going to go, why is Vanguard changing its decision? I'm going to read that part. I ain't going to read the whole thing because I got something I got to do soon. Why is Vanguard changing its position? The firm's restrictions on crypto ETFs have remained firmly in place even after the Securities and Exchange Commission approved the first spot Bitcoin funds in early 2024 and the first Ethereum products later that year. Notably, Vanguard's internal client guidelines and platform eligibility rules kept those ETFs from its self directed brokerage system, citing regulatory ambiguity and investor protections concerns. However, the calculus changed from following a sweeping shift in the regulatory environment under the current U.S. administration. So he's talking about Donald Trump. Donald Trump's for crypto. The SEC's pivotal toward a pro-innovation stance, combined with the years of court decisions, effectively evaporated the regulatory uncertainty that Vanguard had long cited as a barrier. Indeed, the approvals of the spot crypto ETFs were underpinned by robust frameworks that establish how surveillance sharing agreements, custody arrangements, and disclosure standards apply to digital assets. These frameworks, first battle tested with Bitcoin's ETFs, became the template for subsequent products, significantly reducing the operational risk for brokers of offering access through retail platforms. Furthermore, the move is an acknowledgement of irrefutable market realities, and recent study found that 35% of younger, wealthy Americans have left their financial advisors because they do not allow access to crypto. BlackRock's iShares Bitcoin Trust (IBIT) has become one of the fastest growing ETFs in U.S. history, demonstrating the demand for crypto exposure had decisively shifted from niche trading platforms to mainstream asset managers. Today, spot Bitcoin funds manage approximately 120 billion dollars in assets across issuers, while Ethereum's ETFs collectively hold nearly 20 billion dollars. At the same time, newer products tracking Solana and XRP are succeeding thanks to strong market demand. Beyond regulation, the absence of crypto access had become a burgeoning. I don't even know if I said that word right. Y'all fix it for me. Competitive liability for Vanguard. Notably, many clients already held cryptos, ETFs, and accounts outside Vanguard while maintaining traditional holdings on the platform. This verification force advisors to route trades through separate institutions, complicating processes such as tax loss harvesting and a model portfolio management. So this decision acknowledged that clients seeking exposure through regulated ETFs should be able to execute those trades within their primary Vanguard accounts rather than migrating capital to outside brokers. Andrew Kajeski, head of the brokerage and investment firms, and Vanguard reportedly said this right here. Here, I can't read the rest because I got something I got to do, but I'll keep it on here real quick just to show y'all. Y'all can pause it. I gotta sit here and do something. Gotta put my goddamn kid to bed. Almost 10 o'clock. Hold on, I think I lost track of time. Let me double check real quick. But here, just read that real quick. Yeah, it's almost 10 o'clock. Yeah, but read that. I will go down a little bit more so you can see, and you can pause it whenever you want to read it. Yeah, that's the bottom of it right here. So yeah, you got the 9.3 trillion giant, or the second one, sitting here about to allow their clients to trade cryptocurrency. Crypto's going mainstream, so if you're not in it, you might want to get in it. But there you have it, 9.3 trillion Vanguard in the crypto. Don't forget to like, share, comment, subscribe. Depending on the platform, follow. Also, don't forget to get yourself a Tangent wallet. You want your crypto off these exchanges, not your keys, not your crypto. Just like if your money's in the bank and the bank go bye-bye, they holding your money. Same thing with the crypto exchanges. So get yourself a cold wallet. I use and work with Tangent. I use that. You can use my promo code JohnX to get 10% off, and I'll catch y'all in the next one. Peace.